Let's go to the trading floor, find out what is going on. What are the traders talking about? They're at the CME Group. And here we have Scott Gecas. He's with Walsh Trading in Chicago right now. I was noticing we had a big gain in the Dow this morning, over 200 points higher. And I believe we also had a rally going on in crude oil. Let's take a look at what's going on in that regard. Energy markets, interesting movement there, up 73 cents. We're at 57.08 on that December contract. What was driving that in the outside markets there, and is any of that spilling over into any of the ag trade today?
Well, right now, all the markets across the board are just moving on the trade war talk, the rhetoric, the news coming out saying that they came to an agreement about the tariffs being rolled back. However, they also came out and said, well, there's really nothing in place yet, and trade wars might be pushed back to December. So, again, the soap opera is going to continue on until we get something in ink. But back and forth rhetoric, who knows what's really going to happen? I mean, anything can come out at any given point in time. I mean, they can come out and just cancel everything. So no one really knows what's going on. But with the Chinese saying that they came to an agreement, that's why you're seeing a big push in all the outside markets. The grains aren't really focusing on that. They're focusing more or less on tomorrow's report. So the one thing I want to make note is with the soybean market, coming in on Monday, the option skew is about $3 high to the upside skew for the upside calls. Now, going into Tuesday, that completely flipped to the downside puts, where the puts were holding about a $2 skew. Now coming into today with just a few hours left before the report, the skew is almost flat. It does have a little bit of bias to the upside calls, really not that much. So the volatility has been all over the place in the soybean market. Corn, it's odd. It's really odd because the skew is flat. Volatility hasn't been moving around too much, and it's been flat all week. Usually when you go into a report like this, you see a big spike in volatility just because no one knows what's going on, and you have not seen that in corn. So what we're going to be looking at is the numbers that are coming out tomorrow. So if we, in the corn market in particular, if we get lower yields and lower acreage, I mean, we could test, 410, 420 if that surprise happens. And the reason why I say that is because we have a lot of shorts right now, and if they decide that they have to cover, I mean, all bets are off, all levels are off. I mean, they're just going to scramble just to get off those shorts, and that's going to cause a lot of short covering, spike in volatility, as well as upside pressure.
I'm glad you brought that up, and it is going to be interesting to see if at this point on the calendar and with the harvest that far behind, if USDA will go that far out on a limb or not in this report. That's going to be very intriguing to see how those numbers come out. We'll pause right here, Scott, and we'll come back and see what's going on in cattle and hog trade coming up after this. Well, this morning before the markets opened up, USDA released their weekly export sales numbers. They were big on the soybeans, and then I wanted to take a look at the beef and the pork exports as well last week. A lot of anticipation on what that pork export number might be. Well, it turned out to be 24,900 tons. Of that, we had 16,600 earmarked for this year of 2019. There were 8,300 tons for next year. And, of course, everybody's interested in China. How much are they going to buy? Did they buy any? What was going on with them? Well, the makeup is for 2019, China did buy 2,800 tons of pork. So that was a bit of a net positive there, although the amount was probably lower than had been hoped for by the trade. But then in 2020, we had net sales overall of 8,300 tons, but China had net reductions of 2,000. So that means between this year and next year, they only had a net purchase of 800 tons. So that was very disappointing, I would think. Now, let's take a look at the current market prices here. Right now on the live cattle first, we'll go to the big board. On the futures, we now have the December contract half a dollar higher at 119.50. The deferred's a little weaker. On the feeder cattle market, we now have the November contract up 50, but January up $1.05. We're at 145.47. On the lean hog market, we currently have December 40 higher, but the February is up $1.20 at 73.97. All the deferreds are stronger, but not that much. So we go back to Scott Gecas there in Chicago. Scott, what do you make of the export sales numbers on the meat and the market response after that came out?
Yeah, with the trade war talks in full swing, I mean, the soap opera is continuing. In my personal opinion, I think it's just political maneuvering whether or not they're going to just ramp up import their import campaign. So they lifted the ban on Canadian as well as Brazilian pork. So that is definitely putting a little bit of pressure on the hog market in particular. But if you look out to the deferreds, I mean, the call skew is there. Upside calls are a lot more active than downside puts. So if we get any type of tariff rollbacks where they actually do something instead of just, tweet here, tweet there, we think that the pork prices are going to continue to see some upside movement. But until we get any type of sustainability with real news coming out, I mean, everything is up in the air. And, with the imports being a little bit sluggish, I mean, that's the reason why you're seeing a little bit of downside pressure, as well as opening imports from Canada and Brazil. So we just have to wait and see what is really going to come out. But with China prices over 200% on the year, the demand is definitely there. It's just a matter of timing. Some of the traders that we've been talking to in the hog complex, they're just worried about short-term supply concerns. But if you look at production from the first to second quarter, it's supposed to drop the largest in about 12 to 14 years. So that's a little bit bullish tone to the upside in the deferreds, but we still have to wait and see what is really going to come out with this trade war talk.
Absolutely. All right. Well, thank you, Scott, for sharing the time with us today. I always look forward to these little talks. Scott Gecas is with Walsh Trading. He's located right there in Chicago and broadcasting live and direct from the trading floor. Always good information.